good evening, good afternoon. Just bringing a review of the FTSE 100 on the 16th of June 2015. Okay, folks, it's a deal here. A market analyst on behalf of CFDs.com. Certainly be sure to visit their website and certainly indulge and embrace their trading platform. If you'd like to know more about the services and free products, certainly visit the actual website, which is www.cfds.education. Okay, or alternatively cfds.com, and certainly apply for an account there. Okay, right, with regards to the FTSE 100, let's start. Okay, so the Asian markets overnight absolutely annihilated in especially in China, down almost 3.5%. That's quite a obviously substantial sell-off. If I just bring up a chart of the Shanghai, just show you the actual damage on the daily chart. As you can see here, I mean, this is something that I'd already drawn in from a rising contracting wedge pattern. So obviously we've left a gap behind. Okay, for those that are obviously based on technical trading. So a break down, which is obviously negative for global markets, and the situation with regards to Greece obviously is ongoing. There's a new geopolitical situation opened up with Russia, with a certain obviously with an article on Reuters today with regards to intercontinental ballistic missiles, with regards to Mr. Putin organizing 40 plus to be obviously put on the border, etc. So that certainly isn't good news in terms of escalation, although in terms of oil prices it hasn't done much, to be honest with you. I mean, Brent crude is still languishing at the lows, although US crude certainly has certainly pushed higher, but not substantially. Okay, so that certainly is a situation. I think one of the reasons why the market's jittery as well is with regards to the FOMC and the uncertainty regarding potential rate hikes going forward. So that's something again that we need to certainly take into account as well. So there's two factors. Okay, so the Asian markets obviously sold off, as we know why, because of the situation with regards to Greece, etc. The Nikkei was down, the Shanghai was down, Hang Seng was down, so therefore risk-off scenario. Again, talk about capital controls, etc. Talk about a potential increased rhetoric from Mr. Tsipras, potentially calling him. I think there was a quote today with regards to him accusing the IMF as, I mean, basically branding them as criminals, okay, or criminal activity, etc., and so on and so forth. So that certainly isn't good news, okay, and that certainly isn't bridging gaps at all. If anything, it's burning the bridges. So situation there doesn't obviously still looks dire. Though, having said that, though, Europe certainly managed to bounce off the lows quite substantially. So I'll certainly do another video with regards to European stocks, but for now we'll have to interpret it from a FTSE 100 perspective as an impressive recovery, an impressive reversal, but we'll see whether it has substance, because we've seen the recovery before and the market obviously has sold off. My biggest concern with regards to the FTSE is the fact that this Shanghai has broken out this falling or rising contracting wedge pattern and is actually bearish for the actual FTSE 100 going forward. Okay, so if we bring up the chart of the FTSE very shortly, first of all let's just try and discuss the other fundamentals as well. If I just bring up the actual calendar, so bear with me. So the FTSE 100, the major news for the FTSE 100 today was the inflation data. The inflation data, the fact that the way in which I've read it and interpreted it thus far, British inflation turned positive again in May after dipping below zero in April for the first time in 55 years, suggesting the country's inflation or flirtation with deflation was only brief, etc., etc. So that should obviously help sterling move higher, which it did. So if we look at the chart of sterling, so if I bring up a chart of sterling, as you can see for the day, bullish candle. A 4-hour chart, as you can see, a thrust higher. A 60-minute chart certainly is a thrust higher as well. So impressive move on sterling for the day, and obviously the inflation data helped. Highest currency obviously is negative, or interpreted as being negative for the actual equity markets, and that creates a risk-off scenario. Okay, so that's basically how I'm reading it in terms of the actual FTSE 100, and obviously brings rate hikes forward as well. Okay, and that's my interpretation of events. Okay, so with regards to fundamentals, that's the textbook understanding or interpretation. Then we also had some obviously German data today was obviously weak as well. We had German ZEW server 62.9 it came in at. Survey expectations came in lower as well at 31.5. So German data obviously weak. Then we also had some monthly house purchase lending in April down 10%. So again, on last year, that's not exactly good news. The quarter-on-quarter employment came in line in Eurozone, and obviously actually fell slightly in terms of year-on-year. So there wasn't much in terms of data, but the most important one, from my perspective, really is the inflation data. So add in the fact that you had Greece, geopolitical uncertainty as well. Obviously Shanghai down quite substantially, etc., etc. Okay. Now let's try and interpret the technicals now. So let's go to the FTSE All Share, which I like to do. The FTSE All Share is at its 200 MA, so again that certainly needs to be respected. Previous resistance equals support as well, so it is in a key zone. Okay, but my concern now is with the FTSE 250. It's actually broken out of its weekly channel. Obviously not good news. Okay, and if you look at the daily chart of the FTSE 250, it's actually broken out of its bullish wedges or bullish trend line. This key trend line here is broken out of. And obviously we had this rising bullish channel which is broken out of as well, which is no coincidence given the fact that sterling is starting to increase. So obviously an increased sterling is obviously not bullish for the FTSE 250 because they're smaller market cap stocks that are heavily reliant upon the price of sterling obviously helping them. So again, that's something to certainly consider. Now there is a potential for argument here for a H&S formation as well. So you've got your left shoulder here, your head obviously there, your right shoulder, and then obviously down we go, and your projected target probably will be around the 17,200. So again, that is the scenario if obviously Greece fails to obviously fulfill its obligations and pledges, and obviously goes into default. So that certainly isn't a good situation or scenario at present. Okay. With regards to the FTSE 100, let's have a look at the actual main index now. Let's go to the daily chart, or even the weekly chart, shall we say. Weekly chart, as you know, after the failed bull flag, we've had this emotive sell-off, and the market obviously had broken below the key support at 6730. So that 6730 and 67 or 6690 will be the key zone. We dropped as low as 6650 today, so that definitely wasn't good news. Okay, from a technical perspective, obviously we held previous resistance equal support at that 6650 level. But from my understanding of technicals thus far, this is not a healthy sign, okay? Especially with the ongoing news with regards to Greece uncertainty and obviously FOMC overnight today. We have, well, tomorrow is the actual minutes being released. So, again, interpreting all that, again, is just adding to uncertainty from that perspective. So, markets hate uncertainty, so we have to interpret it as such, okay? The 60-minute chart, you can clearly see here lower lows and lower highs. Okay, if we try to connect the pivot lows, nothing here at present, unfortunately. So we can't really connect the pivot lows for now, but the 60-minute chart basically is showing you that we obviously are making lower lows and lower highs. So innocent, or should we say guilty until proven innocent from my perspective, although it should be the other way around, but it's currently guilty of a downtrend or bearish trend, obviously, so until it's proven otherwise. So from my perspective, it certainly is moving low. We have a bear flag formation here, and the market certainly seems vulnerable. Okay, so if we do break out above the 6735 region, 6740, then it certainly brings the bulls back, and we may well get a short squeeze up to the 6870 potentially. Okay, potentially. Again, everything's hypothetical. The market's moving more upon emotions and panic buying, panic selling, and news flow. Okay, so any type of news out of Greece and the market generally, any bullish news or purportedly bullish or expected to be bullish or interpreted as bullish, creates a massive short squeeze only to be denied later on, and then obviously the market continues to sell off. So that certainly isn't a good sign. Okay, so again, if you do potentially go lower, then you do have that region around 6600 potentially lower. So we'll see exactly how Asia responds, but that given the fact that the Nikkei was down, or should I say the Shanghai was down so substantially, isn't a good sign. Okay, so again, to understand it as such, given the fact that the Shanghai down 3.5%. Okay, so the FTSE 100 from a 60-minute chart, as you can see, watch out for that 6740 zone. If we go above that, then obviously from a technical point of view, one must adjust and certainly respect the bullish scenario. Now, if you use a fib retracement, you are looking at 38% correspondence with the previous support equals resistance. Okay, situation. So again, watch out for the other golden ratios as well. With regards to the FTSE itself, we can certainly draw another trend line here, taking the pivot high from here, connecting it to the next pivot high. So if we do thrust higher, you are looking potentially at 50 MA resistance, and again in that 61% level. Okay, given the fact that we are making lower lows, lower highs, so therefore we should respect it as such. The 10-minute chart of the FTSE 100. Now, I did have this key trend line drawn in. We broke out. I did actually get stopped out at 6720 on my short. So certainly are respecting. I mean, the 10-minute chart certainly seems to be in a more bullish scenario or bullish phase. Again, we can observe, if I just draw in any key lines or key levels of resistance, that will certainly come into play on the morrow. Okay, they are the levels of, okay, so you have 6725, 6730, so there seems to be some sort of resistance okay, around this zone at 6730, 6740, 6750, so watch out for that. Certainly will keep a keen eye on that with regards to going into tomorrow, especially given the S&P 500 obviously started to move higher as well, so that certainly needs to be respected. There's nothing else that I can draw this obviously other than this channel. If you do push lower, then you are looking at 6, 7, 10. Is there an inverted head and shoulders at the moment? Too early to say. For now, I'm just going to respect this fib 75% resistance, which is around the 6715. Let's see if the market can surpass that. Obviously, if it does, it'll be obviously hit the 6735, and then again, like I said in the 60-minute chart, if we do call back 6740, then we need to start respecting the bullish scenario. Okay, but for now, unless there's any real resolution or some sort of agreement on Greece, I can't see anything otherwise at present. But again, the market is king, and the market will dictate which way it wants to move. We just have to adjust accordingly. Now, other than that, I mean, I can't see anything. I mean, we do have this key trend line here that obviously we've broken down from, but even then, that's certainly what can we say? I mean, what's the best word to do that? I mean, it's certainly a biased trend line. Okay, you do have the same type of trend line on the 60-minute chart as well, which probably needs to be respected more, given the fact that it was being observed or being respected. So let me just draw this again. Bear with me. This is a channel that we need to respect. So given the fact that we've broken out of it, the red channel, well, red candle was the bearish engulfing candle from the morning. Obviously we had this bearish continuation pattern. Again, if we take out that 6, 7, 10, which obviously we failed on the 60-minute chart, so the bears certainly remain in control there. If we can break above that, obviously with some conviction, and take out that 6, 7, 40 level, then you do bring in 6, 800 into play. Okay, so again, it's all about the market, folks, and the news flow that comes out. The US markets, I'll do a video on that shortly, certainly did show some strength, but that certainly needs to be investigated further as well. Again, China being down 3.5%, I can't ignore that. The uncertainty regarding Greece, I can't ignore that. And the FOMC being dollar supportive, I can't ignore that either, because obviously it's bearish for commodities in terms of the FTSE 100. And as we all know, the inverse relationship with commodities and the FTSE 100 itself. Now, I'll quickly bring up the chart of Brent. Obviously, as you can see here, 4-hour or 60-minute chart certainly was bearish throughout the day. So there was no real argument for the FTSE 100 to rise, given the fact that the oil prices remain subdued. Okay, the daily chart of Brent itself, yes, we are consolidating. We'll have to see exactly where this goes next. We do have this key support level, previous resistance equals support 61, currently at 63, and we seem to be consolidating here. Whether or not we push higher, it's debatable. Okay, the situation with regards to Russia and Ukraine, that could certainly give it the impetus it needs to move higher, but then that's not exactly bullish for equity markets, given the fact that it's a geopolitical move as opposed to a socio-economic move, i.e. stronger growth. The chart of copper, again, it doesn't exactly look very healthy either. I mean, it's breaking down here, and the next support level, as we all know, is going to be potentially around the 250, 2.5, 255, although there is some type of previous resistance equal support around this region. But again, given the fact that the actual news flow or economic data, nothing came out with regards to a bullish economy, which obviously supports the demand for oil. Again, that certainly remains circumspect, unless Miss Yellen obviously paints a very sublime picture tomorrow in terms of economic growth, etc. But for now, certainly remains in the Campbell bearish scenario. Okay, the chart of oil, I'll bring up the chart of oil as well whilst we're here, crude oil. Okay, so again, you're looking at a 60-minute chart, nothing impressive there at all. a 4-hour chart, yes, we are consolidating, but nothing impressive from that perspective. Daily chart itself, again, we're in that consolidation phase of trading sideways. Let's quickly go to a 10-minute chart, see if I can see anything. We had a topping tail, and the market certainly is holding that resistance at $60, so no real thrust higher at all. Okay, so no real impetus from that perspective. Now we just do want to quickly show you the charts of NZD and USD, Aussie USD. This is something that's quite interesting. Now there is a potential inverted head and shoulders forming on the 60-minute chart, but having said that, the dairy auction did come out negative today. So again, and given the fact that the daily chart obviously is in the doldrums, and the FOMC decision as well, so can we really read anything into it? That's the question I need to ask myself at this current juncture. Now we all know the situation with regards to the Kiwi being in a bearish channel, and certainly it's not a chart that you'd like to buy, especially with the Shanghai being down 3.5% overnight. So again, there's a counter argument there. Okay, now the Aussie USD itself as well, it certainly seems to be languishing. It's not attempting to make a move lower. So in terms of the Kiwi, it's certainly in a stronger position. Okay, and again, you can argue here potentially it's looking to obviously make a move higher, i.e. indicating a weaker dollar. But even then, given the fact that the situation, I mean, obviously it's in a as you can see, it's coiling here, and certainly an argument can be made that it certainly is stronger than the Kiwi bear itself, and could certainly thrust higher. So again, it's wait and see mode. A 60-minute chart, you can see here, certainly is resistance, resistance, resistance. Okay, let me just quickly bring up the chart, the dollar as well, because this obviously is key with regards to the dollar and the actual FTSE itself. Just finding the chart of the dollar. There we go, FXCM. Okay, so daily chart at the moment, we obviously are consolidating, or in this consolidation phase. One could argue on a daily chart you have a bear flag situation, so that one could certainly argue from that perspective. 4-hour chart of the dollar itself, there is a obviously a gap fill support level here, so nothing really can be gauged from a 4-hour chart. 60-minute chart, we certainly seem to be putting in a potential base, one could argue, although they are unfilled gaps below as well. And the 10-minute chart certainly has an argument for inverted head and shoulders formation. So there's your left shoulder, your head, and obviously a potential pop higher. Again, arguments on both sides, but the daily chart of the dollar certainly does potentially seem weak. Given the fact the Greece situation, Miss Yellen may well use international developments, etc., as an argument to potentially postpone a rate hike. Okay, so again, that could be dollar negative, which again could potentially propel the FTSE 100 higher. So there are a lot of scenarios here, but again, the market is king. News flow will dictate, and obviously sentiment and momentum will certainly dictate as well. So watch the Asian session, and the Asian session should have the clues. Goodbye now.